Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. This is our 535th edition of this show, traders. We are filming on Thursday night. That's Jan 14th for trading on Friday, January 15th, 2010. Traders, as you know, with our videos, unless instructed otherwise, we are always out at the end of each day. So most of these videos are geared for one day's trading. Please keep that in mind. All right, traders, right off the bat, we have a green Omni on the board for indices, and boy, have they been tricky this week. Indices are in parallel channels, and now the S&P is in a secondary parallel channel. The transportation average, the industrial average, they're in parallel channels, as is the NASDAQ, and looking like they want to continue to work higher. And currencies, especially euro currency and dollar index, are back into their flag formations, traders. I showed you that just a couple of videos ago, that the dollar was in a bull flag and the euro currency was in a bear flag. And until they break out of that flag, it's difficult to know which way they will go. 2 days ago, the euro currency broke out of the top of the flag, so we thought maybe it won't be a bad flag and it'll go higher. We got long, that trade worked, but on the same day, sugar trade didn't work. Analysis has been tricky. Yesterday, okay, so we traded well, and then, we traded those trades. Then on Thursday, we got stopped out in the bonds. So traders, rough and tumble week. I know how you feel. It's been kidney punch, win, back punch, win, punch in the face. You know, it's been tough. It's not one of those win weeks, right? But that is how this game is played out, traders. Technical analysis, as we know, is very highly accurate. Let's say you had your analysis, you do it really well, and your accuracy level is 80%. Well, you still have 20% losers that are going to have to be sprinkled out throughout your trading. There's no way to get away from that. So I do not want any of you analysts who are having difficulty this week with so many mixed signals to think, oh, maybe analysis doesn't work anymore. It does work. Markets get a little bit freaky, especially the first week, second week back in the new year. Plus, you have Martin Luther King's birthday on Monday, so markets are closed. Speaking of which, traders, we're not really handling this week as a big 3-day holiday weekend because, yes, Martin Luther King Day is celebrated, banks are closed, exchanges are closed, but it's not one of those holidays like 4th of July or Christmas or New Year's where everyone goes gangbusters and people leave the cities early during the week. So we don't expect lots of reversals. We don't expect that 3-day holiday weekend nonsense to happen on this holiday. But we will be nimble with our trading Friday. Of course, trading is closed on Monday. Keep that in mind. But for Friday's trading, we do have a bear flag in the indice of the U.S. currency, of the euro currency, and it's in that bear flag right now. It's starting to pull down into it. We have a bull flag in the dollar index, and it's back up into that bull flag, which is promising for U.S. dollars for now. We are day traders, so we'll see what we get. Traders, if you're uncertain what a bear flag is, basically it's the market moves up higher, 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 has like almost a straight run up, then starts to work sideways to lower in what looks like a parallel channel. That is usually a bull flag, and you expect an upward breakout, and that's what the dollar index is in right now. Then, of course, here we have a small illustration of a bear flag. Bear flag is the market trades down, 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 almost straight down, 5, 6, 7, 8 days, whatever amount of days it takes. Then suddenly it has a few up days, sideways to up, in which you can draw a parallel channel. That is your bear flag, and downward is expected afterwards. Then, of course, the indices are in a parallel channel, traders, and a parallel channel which is bullish looks a lot like this. 2 big lines across the top and bottom. The market keeps hitting the tops and bottoms of that parallel as it moves higher. That's considered a bullish parallel trend channel. So with that in mind, the S&P is in one of those, and we are going to look to buy the dips. Again, traders, you traders out there that use a lot of technical analysis, it has been very tricky this week. Analysis is pointing up and down. Some indices pointing up while others are pointing down. You know, the chart's got a nice bull formation, but indices are bearish in other markets. So, or I should say, indicators are bearish in other markets while their formations are bullish. So very, very tricky analysis this week. But I would imagine the analysis in the markets will slowly just come back together as more and more volume picks up into our markets as the new year moves forward. So keep your dukes up, traders, and let's go look at some parallel channels and some flags. Okay, traders, the first chart you are looking at is the Dow Jones Industrial Average Daily Bar Chart. This chart you've seen in the past. I showed you we had a lot of resistance at some point, and that once we got above it, it became support. The support has held well, and now we are starting to rally into a new area, and we are in a bullish parallel channel, just like the one I showed you on the board moments ago. So we are in a bullish parallel channel, and it does look like it wants to start reaching the top end of that channel. That's where I think this is going to go, traders. The support, which was resistance, held well. You are clearly in a bull market right here. That looks to me like the fundamentals that come out 8:30 on Friday morning will push the market higher. Let's see what happens. Traders, a couple of more charts to show you here. Okay, traders, we're now looking at the Emini S&P daily bar chart, the March contract. Clearly in a huge long-term parallel bullish channel, right? Bullish parallel channel. There was resistance on the way up. Got above it. Now it is support. Got above it, tested it, and held, and has now developed into a secondary bullish parallel channel right before your eyes. That would be this one right here, traders. So we have two parallel channels now. The secondary that we're in at the moment. And, of course, the large one here illustrated by the blue dashed line. So I think that we will get to the top of that parallel channel. And, again, this looks to me like the news that comes out 8:30 Friday morning will buoy the market higher. Let's see what happens. Fundamentals always come out in the charts first. That's a chart that does look like it wants to move higher. So I am going with the buy of dips in U.S. currencies for Friday's trading. Let's look at a few more charts here. Okay, traders, moments ago I showed you a bear flag and said that the euro currency was in a bear flag. Well, we went down, 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 created a flag pole. Then we have the parallel channel as we work our way upwards a little, creating the flag. And that usually creates a market that moves lower. This is a bearish formation. Once we finally come out of that flag, it should break to the downside, especially because when we popped out of the flag here a couple of days ago, it failed to go higher. Turned around, went right back down into the bear flag, and is now threatening to test the lower end. That, my friends, is bearish movement in a currency, the euro currency. So obviously, if that's bearish, then the dollar index should look bullish. Here's your bear flag. Let's go look at a bull flag. Okay, traders, we are now looking at the dollar index daily bar chart, and this, just like you see in euro currency with the bear flag, this has a bull flag. You went up, 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 creating your flag pole. Then you started to go sideways to down, creating your flag. And now you are back into that flag and starting to work its way higher. Bull flag, dollar index. Bear flag, euro currency. Looks to me like now we will work inside of this flag. Traders, whatever side you break out of is the way you will be able to trade on a longer term. So if we break out towards the upside, you can start buying dips for a while. And if we end up getting out of this and go to the downside, you'll be able to sell the rallies for a while. We think it will be upside. We think the dollar will be stronger, and we're expecting that bull flag to do its job at some point. Keep your eyes on the currencies. For tomorrow, Friday, we will be looking to sell rallies in euro currency. It has dropped quite a bit Thursday evening and has not offered us an opportunity to get short. But if it reaches an omni sweet spot, we will certainly look to get short euro currency, and that would be the same as getting long this U.S. dollar index. Pull your charts, traders, pull your indicators. Certainly look for flags and parallel channels. You'll find the parallel channels in the U.S. indice markets, and you'll find flags throughout the currency markets. Do your homework, traders, and take a look for yourselves. So, traders, you saw those charts, right? I mean, come on, the flags are there, the parallel channels are there. So we have to go with formations. And because technical indicators have been so mixed, so to speak, this week. I am going to choose formation over indicators. We'll trade the formation. We'll let the indicators catch up because that's what I think needs to be done. Tonight, Friday, Sunday into Monday. Let the indicators catch back up to the market action. Trade the market action. Formations usually will give you proper direction, so we will go with that. All right, traders, I'd like for you to come on down to my site. It's www.livewithoscar.com. Jump into the free chat room. Check out the other things we have there for you. Allow us to teach you how to be better analysts and better traders. So make sure you come on down. Traders, I tell you this in every video, but no joke. A stop is your best friend. Never trade without stops. Today we had a bad trade on in the U.S. 30-year T-bonds. I'll tell you what, I am so glad for stops because at least once they get hit, you're out of the trade. If you have a bad trade on, a stop's about the only thing that makes you go, okay, enough's enough. My plan is not working. My plan was to get out if it went this high. My stop got hit. Out, executed the plan flawlessly. Whether it wins or loses, you still have to stick to your plan. Part of planning any trade is having a stop and placing that stop first. So remember, a stop is your best friend. Win, lose, or draw, make sure your stops are in. All right, traders, I tell you this every day. Keep your emotions out of trading because what happens is over the long haul, keeping your emotions out of trading, the best decisions are made. Because if you come in like we do every day with a devised trading plan, a scenario, exactly where we're going to trade, and you execute that plan every day, well, if you do that without emotion, then the times where your emotion says, oh, I better get out, and you do get out, they don't interfere with what the real results will be at the end of the year. Today, for instance, on a losing day, if you decided gut feeling, you know what, let me jump out before the action, I'm in the trade, I don't like it, I want out, and then the market works, well, then you've psyched yourself out and you've done the wrong thing. What's worse than that is this. If you decide I want to get out of this trade because of an emotional decision and you get out and it turns out that trade would have been a loser, well, now it makes you second guess every decision because now you're in another trade plan the next day and you go, you know, my intuition worked yesterday. I better get out. And then you've started interfering with your trading. You're interfering with the results. You're putting emotions in front of mathematics and pure strategies. And traders, that doesn't work. So if today you wished you got out of bonds and you didn't and you lost, you cannot think that your intuition is going to outsmart analysis. A bad trade's a bad trade. Seat of the pants decisions are the worst way to be a trader. Take my word for it because you don't know why you did what you did. You have no trading rules that you can count on. Without consistency, there is no way to be accurate, traders. You need consistency at all times. You need discipline, and you need to stick to your plan. Win, lose, or draw. That you are getting from me after 28 years of beating myself over the head. I am kidding. I am not kidding with you, traders. I have had more wars with these markets, and what I have learned was if I just didn't interfere at all, the year would have gone so smoothly. Well, I learned that years back, and I've watched it many, many times, and the times I did interfere were times I wished I just simply would not have. Well, I've gotten to a point where I almost never interfere with a trade. It is very rare that you will find me send out a flash update that actually interferes with what we had planned the night before. When you don't interfere, you get the proper results. It's the only way to test the system. All right, traders, enough of that. I just wanted to go over it because bad days are tough days. They shake your confidence. You need to be confident in your analysis. You need to realize analysis works most of the time. Sometimes it will not. That is part of the game. All right, traders, make sure you give us a call anytime, day and night, 702-629-4755. And as always, keep your emotions out of trading. One of the best things you can do to help yourselves with that is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.